So overnight we had some key inflation figures out of the US. So US CPI released, and it was basically in line with the expectations, cooling slightly from 3.5% to 3.4%. Presuming, Jack, with this meeting expectations, what were the movements like on the back of this?
Yeah, it was interesting that it did meet expectations because we've seen a bit of fluctuation over the last couple of releases, but as you said, everything was in line with what the analysts predicted. Importantly, both headline and core, which strips out the key petrol prices and food prices, both fell 0.1% respectively. The effect it had on the dollar is initially the US dollar actually softened a little bit as inflation wasn't heating up, so it sort of took us a bit of sting out. But as the session went on, the dollar actually gained quite a little bit of strength and was ticking up across all crosses. I guess even though inflation did cool slightly, the core figure is still at 2.5%, and the Fed likes inflation to sit at 2%. So we're still much higher than their target, which is important to note in the grand scheme of things.
And to the geopolitics overseas with US and Iran. So both sides sort of changing their tune a little bit in the last few days. That may or may not last. We'll just see over the next sort of few days, but calming down a little bit in the last few days, and markets and things fairly flat on the back of those.
Yeah,
those
it was
chats.
Quite stable compared to what we've been seeing of late. Oil didn't really move too much; it was pretty flat. Interesting that both sides are starting to change their positioning. The US moving away from physical military action to more of an economic squeeze and preventing Iran to generate any funds to fuel this war, whereas Iran have come out and said they started off with a defensive mindset, protecting their own assets, and now they're going to shift to sort of advancement and going on the offensive. So whether this posturing is both sides recognising they're not in a great position of strength to win any negotiations and trying to change the stalemate, but I guess the net result is it remains in a stalemate and looks like being in one for the foreseeable future.
And some pretty strong earnings from a couple of the big AI companies that gave a fair bit of strength to the Nasdaq.
Yeah, so the Nasdaq gained overnight, whereas the Dow Jones, which is sort of the big blue chip companies, didn't really make any gains. And this was led by, again, some AI companies with their earnings results. We saw CoreWeave, which is an AI cloud company, basically double their revenue over the last year, and their share price flew up. Cisco, which is a manufacturer of hardware and software and going to be a big player in the AI build out. They're sort of shifting to building out data centers to sort of capitalise on this. Again, they beat revenue expectations, earning expectations. Their share price did come off slightly, but the backdrop is the share price has risen 25% the last 3 months. So these results just show the AI trade is still alive and well and driving a lot of the gains we're seeing out of the US.
And UK GDP coming out today and expected to grow by 20 basis points.
Yeah, so we'll see a small uptick in growth, not expecting too much effect on the pound, where, like all these economic announcements, where we'll see is if it misses either side and there's a surprise to what analysts are forecasting.
And US PPI data later tonight, and expecting this to drop down to 4.2%.
Yeah, so we saw the consumer side released last night, and then tonight we'll get the producer side, and like the consumer side, we're looking at a fall in PPI, although this one will be larger than the consumer, and it's got to continue to feed into this inflation story.
And some of the big moves coming out overnight, the Nasdaq, as Jack said, has gone up. On the back of that, so 0.6%.
Yeah, so not a massive gain like we've been seeing out of the Nasdaq of late, but I guess sort of historically it is still a decent gain on a single day. It's not near the record highs, but we can see it was starting to retreat a bit this week, and these earnings results have sort of corrected that course and given a bit of strength back.
And the euro dollar presumably on the back of that CPI announcement last night.
Yeah, no prizes for looking at the chart and figuring out when the CPI news dropped. So you can see that the US dollar did soften initially on that news, but then it quickly strengthened, which drove that Euro USD pair downwards.
And gold again has continued to increase over the past few weeks and days.
Yeah, so the no real news on the geopolitical front is helping gold, and also with inflation not growing, obviously that caps the USD potential and sort of again takes a bit of the sting out of potential Fed hikes, which boosts gold as it's a non-yielder. So yeah, another solid day, and it's holding about that $4,400 mark. Not too long ago, it was sitting around $4,100. So certainly strengthening.
And just as a reminder, what did we get to a few months ago with gold?
At its all-time highs, it was about 53, 5,400. Yeah, it was quite high.
Okay. So it's probably made back sort of 25-30% of the lows of a few months ago. And some big moves in the US dollar index. Jack, do you want to just give a bit of a brief explanation on the US dollar index?
Yeah, so the US dollar index is basically looking at the US dollar compared to 6 other major currencies. They're all in buckets, the largest being the euro, which makes up over half of the index. But when we're looking at US dollar strength, rather than going through every pair of the USD, we can look at the US dollar index just to give a clear snapshot, 100 being the key benchmark. And we can see it's been trading below 100 since these escalation in the geopolitical tensions the last couple of weeks. The strength has come off the US dollar a little bit, but you can see the CPI announcement pushed it back up towards that 100 mark. So it's sitting at 99.86. So where it was testing up the top there, that was testing the $100 level. So yeah, if you want a quick snapshot of what the US dollar is doing, look at USDX.
And what is that $100 level? What does that actually mean?
It's basically the conversion rate when you're swapping it with the various currencies and the buckets. How they actually boil down the number, I'm not too sure, but it's there are calculations you can do that I'm not going to do. But
so essentially, if we get over 100, we've got a US dollar that is relatively high in strength compared to the other currencies. So we can see that has continued, like Jack said, over the past few days. And the dollar yen, Jack, for the chart of the day, pretty big move. What's that? A month or so ago?
Yeah, a couple of weeks ago. So we did touch on it when we talked about that intervention, where we could see that huge drop at the end of July. So I thought we'd check back and see what it's been doing since then. And you can see it's actually been climbing pretty significantly since that intervention. And it was one of the points we did flag that historically intervention alone hasn't changed the projection or the course of the dollar yen. And that's because those key factors driving the price still remain, and the key one being the carry trade. Obviously the yen is a low interest rate set by the BOJ at 1%, whereas the US dollar holds 3.5% to 3.75%. So you borrow the low interest yen and invest it into high yielding currencies or assets like the US dollar, and the difference in interest rates is what you get to pocket. So that still remains. Inflation in the US is still high. That's not going to drop anytime soon. The BOJ, whether they would like to raise rates ideally to help their economy, but whether they can actually afford to do that is another question. So they're kind of stuck at that lower level. So despite the intervention and despite America and Tokyo teaming up to drive down that price, it's got to keep bouncing back up until something fundamentally changes.
Was that intervention the 3 months earlier, or like
Yes, it was. Yeah. So it was a smaller intervention, but that was a Tokyo set out intervention. The blue line has historically been the point where Tokyo looks to intervene and buy up their currency to support it. But you can see after that it blew straight back up, blew well past it. And the US then stepped in to help out in this latest round, which is why the move was a lot bigger, because there was a lot more currency being bought. The US did this because Japan is one of the largest holders of US treasuries of any foreign country in the world. And the US didn't want their bond prices to fall, basically. So that's why they coordinated to help prop it up.
And the article of the day, the RBA believes it's done with hiking interest rates. I think it's interesting what they say versus what reality will be over the next sort of 3 to 6 months.
100%. We see the headline announcements of the RBA holding rates, but you kind of have to read between the lines about what's actually going to happen moving forward. So this article will break that down a bit. Obviously pretty pertinent here in Australia.
Any other questions, Kikara?
Do we think that one of the reasons why they've decided to hold now despite inflation being persistent is because the ice is falling out of the property market, and if they put rates up, it'll drive it down further?
There'd be a whole range of factors, but that's certainly a big one, given basically every major capital city in Australia, the house prices are falling. So, they don't want to exacerbate that any more than it needs to. We are also relatively insulated from the Middle East conflict at the moment, but there clearly is an inflation problem in Australia. It's just how can they best tackle it? But the RBA certainly wants to look after the house prices as well.
I also suspect because the banks aren't making any money, because no one's taking out loans, so if the rates go up, it's going to make it even.
Well, I saw CBA had a 15% drop in their home loan applications over the last couple of months. So, any raise in interest rates is only going to put that in one direction. So, certainly something they're going to have to keep an eye on.
Thanks.
The US dollar index, is that widely traded as the currency pairs, or do we see much trading of that? Because it seems like quite a good instrument to trade.
Basically, no one trades it. Very few. I think obviously naturally because the dollar index is sort of a combination of, as Jack said, 6 currency pairs. A lot of that volatility gets taken out, and obviously most people like trading things that move around a lot more than this, and then this is even for that sort of large announcement, this is not really a big movement, so it's probably not really seen as a very kind of exciting product to trade. Thank you, everyone.
Thank you.